Dear friends, welcome to the third digital session of L3A. Today, we have the pleasure of having as a first guest, Sarah Gilbert of Northern Trust. Sarah, welcome.
Thanks, Serge.
Sarah, my first question is about the importance of alternative assets in your strategy. What growth do you expect in alternative assets in the next 3 years?
It's a good question, Sergey. So at Northern Trust, we service over 1.5 trillion of alternative assets globally. And we hold this unique position where we're servicing both the asset owner community and the managers themselves. So it gives us an interesting vantage point in the industry. So in terms of how important it is to us, it's a hugely important strategy. And then when looking at the industry and predicted growth, I mean, we need to be pragmatic. The next 18 months to 2 years are going to be difficult under the COVID lens, but we're buoyed by the confidence that the asset owners continue to allocate to alternatives to strategy. So why do they do that? Well, there's two main reasons. So it's the drive for yield and diversification, and we see that trend continuing. So we see alternative assets as an important strategy for Northern Trust.
Excellent. And how do you perceive the difference between the global custodians, as you are, and the independent alternative asset fund administrators?
It's a good question. So I think there are pros and cons to both models. And I would actually say that Northern Trust occupies this space in the middle. Why is that? Because we have the attributes of both players. So if we think about the full depository services that we're able to offer as a US bank, essentially, with a strong balance sheet and a conservative risk approach, kind of puts us in that global custodian place. But we have the operating models and the tech strategy that rivals some of those more niche players. So I think it's an interesting space to occupy.
And how do you see the technology evolving? I mean, what the technology has in terms of place in the industry nowadays?
It's a fascinating question. I've been focused on technology and alternatives for 13, 14 years now. So I've seen massive changes during that time. Gone are the days where, we used to go and see private equity managers, for example, who were keeping positions in an Excel document that took 22 minutes to open. So they were having to get it open before the investor arrived. And we asked them the question, what happens when that spreadsheet doesn't open one day? So it's an interesting time in terms of innovation in the industry. I think traditionally the demographic of a private capital focused manager is small and nimble and very deal focused. So not so focused on the technology side, but the industry is being revolutionized by, regulation. So we're seeing ESG come in next year, which is going to drive more transparency into reporting. So I think there's some interesting things at play in the industry in terms of innovation.
And are there specific challenges you are going to face in the months to come?
I think like everyone, the COVID situation has presented challenges for people. And if I look at it through our client base, it's the managers being able to get out and fundraise. We all saw the piece of research that Frequin did where they went out and spoke to the LP community and were asking them, look, can you actually make decisions based on virtual meetings, if you will? And up to 85% of them said yes. So I think the challenge next year is going to be working with the right managers who have the ability to fundraise.
Absolutely. That's going to be a global challenge for the industry. And what do you see in terms of new trends in the industry or new needs from your client base?
It's a great question, and data is taking part of every conversation that we're having at the moment through different lenses, admittedly. But if we think about the alts managers and the challenge they face, right? So we've got the two parts of the process. We've got the pre-investment monitoring. So I'm trying to pull data from lots of disparate sources and using that to make a decision to support my due diligence process, and then post-investment monitoring. So I've now made my different allocations and bought all of my different investments, and I'm trying to look at sectors and geographies, exposures, and looking at things like revenue. So I think there's lots of data challenges for managers outside of those just being driven by the regulations.
Thank you. You mentioned COVID-19, which in fact has impacted every industry, a little less ours, hopefully, but I mean, has still an impact everywhere. I mean, what are the lessons you drove from the COVID-19 crisis?
Another great question. I mean, it's been a challenging year, especially during the peak volatility times back in March and April. We were delighted with how our operational resiliency stood up and how quickly we got into BAU. So I think it's been lessons around resiliency and how quickly our teams have adapted. So I think there's been some great lessons in the COVID crisis.
My last question is about, I mean, your view about the future.
Mm-hmm.
Are you optimistic for the next 12 to 14 months?
I think I have a pragmatic approach. So, you've picked up from my comments before, I think we need to address it is going to be, a challenging period. There's going to be a lot of uncertainty. We had great news today that the first vaccine's been approved in the UK. So I think we're starting to see the road out of this. How quickly that's going to realise, we just don't know. What I would say from being on the ground and meeting managers and talking about launches, we've seen an uptick in activity in the last couple of months and a bit more BAU approach from the market. So let's just keep going. So I think cautiously optimistic is the way that I would describe myself.
Excellent. Thank you very much, Sarah. It was a pleasure to have you with us today. Bye-bye. Thanks. Question is about the importance.
Thank you very much, Serge. I appreciate that. And to L3A, thank you very much for having me. It's a pleasure to be here and share with you a bit about the observations we've made over 2020, which is what I'll be speaking about. So first, allow me to introduce myself briefly. My name is Levi Yerditsky. I am the head of intelligence at Scope SA. We are a Luxembourg-based company, but the intelligence division is centered in Tel Aviv. However, we're quite global. We have analysts throughout the world, in Africa, in Latin America, in Europe, in the Arab world, in East Asia. So we're quite spread out, but we are centered in Tel Aviv. And just a bit about myself. I was born in the Soviet Union way back when, and I was raised in the USA, and I've been living in Israel for about the past 10 years. I spent most of my life in the intelligence world in various capacities, including geopolitical intelligence, terror monitoring, and conflict analysis, as well as most recently, prior to joining Scope, I was working with the United Nations as a civil military coordinator for the past 2.5 years in Jerusalem. And so what I'm here to speak with you about today is basically the latest trends and developments in the compliance industry. So just to put an emphasis on it, this isn't news as of late. This is a series of patterns that we've observed over the past, let's say over the past year, but especially over the past half year. And I wanted to bring up the ones that we see as not just having an impact in 2020, but things that will have an impact beyond and things that will really resonate over the coming years in the compliance industry. So just so we're on the same page and we understand what the topics will be, I'll be speaking first a bit about the FinCEN leaks, which came out just a couple months ago and was had a major splash globally, not just in our world, but just in the public sphere as well. I'll talk about golden passport schemes, as they're called in Europe, especially as a result of the Cyprus leaks. I'll also discuss the 6 AMLD, which will come into effect actually that just came into effect on December 3rd. And lastly, I'll talk a bit about developments with cryptocurrency and especially cryptocurrency compliance and regulations. And at any point, if you have any questions, you can find the link on the L3A website. You can click on there and put in your questions, and I'll be happy to respond. So first, let's talk about the FinCEN leaks. Many of you may be familiar with this. It is leaks that were distributed by BuzzFeed News to various news agencies throughout the world. So essentially, it's based on 2,657 leaked documents from the US Treasury's Financial Crime Enforcement Network, or FinCEN, and it included 2,121 SARs. SARs are suspicious activity reports, as many of you may be familiar with this. And the ones that they found came from 1999 to 2017. And basically what these revealed is the extent of illegal money, illicit money moving around throughout the world that has been reported to FinCEN through these SARs. And I'll explain exactly what I mean in just a moment. And they've been ignored and the transactions have continued. And essentially they showed that 1.6 trillion euros of suspicious monetary transactions took place in this time from 1999 to 2017. And it showed that over 170 countries were complicit in the movement of this money. So essentially what this means is that the financial institutions and banks, they would see a suspicious action, they would see a suspicious transaction, and they're required, it is incumbent upon them to report this. But after that, they are not required to pause the transaction. And this is essentially a result of bureaucracy and administrative holdbacks where FinCEN doesn't have the resources necessary to investigate every SAR, every suspicious activity report. So a bank is not required to pause its activity as they wait. So essentially they write the suspicious activity report, they file it, oftentimes incomplete, and they carry on with their business. And FinCEN has not done anything about a lot of these. So it really revealed a major problem within the system with the SARs and within FinCEN itself. And it really exposed the extent of illicit money being moved around throughout the world, or money that's questionable, or transactions that are suspicious that were continued despite the banks, despite the financial institutions knowing that there were suspicions. And despite FinCEN being alerted to them, they simply continued, which really disturbed a large part of the public because it made them feel that there's no real oversight or regulation against this. And as a result, and this was not that long ago, it was just in recent months. And as a result, already the European Parliament held a session in response to the leaks that focused on the need for stronger oversight of money flows across the EU in order to fight money laundering. So it showed that it had a call to action. There was already a response from FinCEN, and there was a response from the EU. And we expect that as a result of this, there will be a lot more follow-up, and there will also be new policies put in place to better regulate the SARs and the follow-through on them in order to reduce them continuing without being addressed. So that's the FinCEN files, and we will continue following this in scope and release information as it comes along. The next topic that I want to speak about are golden passport schemes. Now, the reason that this has come up to play recently is also because of another leak. This is what's called the Cyprus Papers, and it was released by Al Jazeera. Now, essentially, the Cyprus Papers is a leak of Cypriot government documents related to what's called the Cyprus Investment Program, or CIP. And essentially, what it exposed is that dozens of politically exposed persons, convicted fraudsters, and money launderers, and people who were under investigation, essentially people who didn't fit into the Cyprus investment program, or people who should have been banned by it, were still able to obtain Cypriot citizenship. Now, I should take a step back for a moment and explain. Essentially, the idea is that if you invest about 2 million euros into Cyprus, and usually this is through the purchase of real estate, you can obtain Cypriot citizenship. And this is a scheme that's used for various legitimate purposes, of course, but it's also used by some in order to obtain the passport from the EU that allows them to have all the benefits that come with that. So essentially, what Al Jazeera exposed was that despite the regulations in the program, that they were not being adhered to, they were not being followed, and that criminals were actually able to prove their own clean records and provide their own documentation, and there was no real due diligence done on any of these on many of the subjects. So people were taking advantage of it who shouldn't have been taking advantage of it, and there's multiple examples of this. It's important to note, however, that the Cyprus Papers came out by Al Jazeera in this year, but already Cyprus has been making reforms to the program. So they made stricter rules and regulations already in 2019 that excluded politically exposed persons and people under criminal investigations or charges. So they already started to address the program due to criticism over recent years about the program. But there was still enough of a backlash due to the high level of exposure. There is about an hour-long documentary as a result of it. So Cyprus had to address the problem. and it suspended the program in November and decided to reevaluate it. In response, also, the European Commission announced its intention to launch legal action, not just against Cyprus, but also against Malta, who has a very similar program. The European Commission also sent a letter to Bulgarian authorities raising their concerns about the Bulgarian citizenship program. So essentially, this flagged the issue of citizenship programs throughout the EU and it forced the European Commission to address them and make efforts to enforce stricter regulations. As of late, Malta, for instance, responded by saying that it will replace its current citizenship program requirements. And essentially what they need to do, or what they're being asked to do, is to ensure that the person obtaining citizenship has some legitimate connections to Europe, or namely to the country where they're receiving citizenship in. So we expect this to continue. We expect for more countries' citizenship programs to be reviewed by the European Commission. We expect them to do so on their own, perhaps before they get letters from the European Commission. And we expect over the coming year for there to be major reforms in Europe for the various programs. The next topic I want to discuss is the 6th AMLD, or the 6th Anti-Money Laundering Directive. So this comes into effect, or this came into effect on December 3rd, and it must be implemented by financial institutions in the EU by June 3rd of 2021. And it's an interesting thing that this is being released, considering that the 5th AMLD was introduced just last year in July 2019 and implemented in January 2020. And it also extended the AML and CFT provisions. So the fact that there is a new one so soon, it means that it was spurred by recent major money laundering crimes that have taken place on European soil, and it basically brought to light the need to make even stricter regulations or better guidelines for anti-money laundering regulations. So essentially, the 6th AMLD, it has a number of objectives. One of them is to really standardize the definition of money laundering. It expands the list of offenses that fall under the money laundering definition. And there's an extension of criminal liability to companies, organizations, and incorporated partnerships, essentially legal persons. So they are responsible for money laundering within their organization. It also introduces a new minimum prison sentence of 4 years instead of 1 for being involved in money laundering. And it creates new information sharing requirements between member states in the EU. Another element of the 6th AMLD is that it clearly addresses predicate offenses. So it describes 22 particular predicate offenses to money laundering. And essentially, just to be clear, a predicate offense is anything that it's a crime before the crime. So if the crime is money laundering, anything that generates money that will be laundered is considered a predicate offense. And before, there wasn't as clear a definition of what a predicate offense is. So now the 6th AMLD aims to impose one, aims to clarify what is a predicate offense, and they've listed 22 here, as you can see on the right. And again, if you want to know more about this and how it might impact you, then you can go through the L3A website and ask a question. I'll be happy to respond in greater depth. Now, the last subject I want to discuss is also something that's very interesting, and it's been developing over recent years, but I found that over 2020, there's been more and more discussions about it, and that is crypto compliances, if you will. So essentially, greater efforts throughout the world to enforce regulations on cryptocurrency. And in a way, you can say this was expected since cryptocurrency came around. It's a very anonymous form of currency, and obviously there's major concerns for it. But as it's grown, as it's become more normal, as people have been using it to pay for things online and make purchases and investments, the global different bodies throughout the world have decided to come together and make regulations or work on producing regulations that will address the issue and make sure that they are on par as far as their transparency as much as regular fiat currency. So the FATF actually met in October, and it recommended regulators to graft travel rule requirements onto digital assets. So essentially, this means that what they're asking for is that there's greater transparency for currency being traded on in crypto platforms. And at the same time, they also released a document on virtual asset red flag indicators. So essentially saying these are the red flags for money laundering in virtual assets as well. So it just shows how much they're putting greater attention on cryptocurrency as the currency grows. The European Commission itself also published a proposal for a regulation on markets and crypto assets, which called MICA, M-I-C-A. And it's meant to be along the lines of Europe's Markets in Financial Instruments Directive, which is the MIFID. So essentially, they're really trying to bring cryptocurrency in line with more traditional currency and traditional forms of money. Onwards to Asia, Hong Kong launched a consultation on legislative proposals to enhance AML and CFT regulations on cryptocurrency, including ensuring that those who are trading cryptocurrency, basically what we call VASPs or virtual asset service providers, that they need to obtain licenses before operating. At the same time, Hong Kong is aiming to ban retail investors from trading in cryptocurrencies and force exchange operators to also obtain licenses. So, like I said, this is something that we've seen a lot in 2020. It's been going on in recent years as well, but alongside the growth of cryptocurrency, we see a growth in demands for cryptocurrency compliance. We've also seen different companies coming and establish themselves as offering AML services or KYC services for those who are receiving crypto funds. So it's clear that this is a trend that will continue, and there will be new regulations over the coming year in 2021 to address the matter, and we will be monitoring that as well at scope. And those are the developments and the trends that I wanted to discuss for today. I really hope they were helpful. I hope I was able to share my observations clearly with you all. And again, I want to thank you very much for having me. It's always a pleasure to share my thoughts and my observations. And if you have any questions, please go through the website and ask away, and I'll be happy to respond. Thank you very much.